Thanks, Tim. Appreciate it. And yeah, certainly only around a decade. That's how early this market is. Only been around since 2009. So yeah, just jump into that corporate snapshot after we skip through the disclaimers. Thank you. So yeah, you can see the share price chart there. Interesting elements of the company is we are well funded, around $10 million in liquid assets. And that's, I guess, borne about by our large holding in Bitcoin. It's 431 if you include those Bitcoins that we recently seeded into our Bitcoin fund. We've had a 50% reduction in operating expenditure as we pulled away from the US and reduced some business lines down to our core offering of blockchain consulting and product development and the digital asset funds management unit. In terms of how the share price responds, it has typically had quite a strong correlation with Bitcoin. 2017 and 2018 was around about a positive 0.9, and that was as we were running that digital asset advisory unit. 2019, that fell away as we pulled that unit away from the business. And 2020, we've launched our Bitcoin fund, which has sort of re-emerged that correlation. As Bitcoin goes up, we're obviously going to generate more revenues directly from Bitcoin returns, which is a good thing, given our outlook for the asset. So yeah, in terms of, I guess, digital asset funds management, we also have a diversified basket of digital assets, which is our second fund. And then we have that product consulting and development division. I'll touch on both those lines a little later. So in terms of blockchain technology and why we're there, we really feel like it's the next evolution in cloud computing. So we're looking to provide our investors exposure to both the transformation of that technology as well as exposure to digital assets. We see digital assets as having venture capital-like returns, but having the liquidity of international currencies. So extremely interesting market and quite attractive. I really see, sort of blockchain and digital assets as having a similar impact as what fintechs have had on the traditional banking space. So yeah, very exciting sector. Next slide, please. In terms of our board, I mentioned my background, being involved with the industry body at the board level for the last 5 years, experience within the Bitcoin trading market, as well as launching blockchain products. Our board has got some deep legal experience, and I believe that is one of the reasons why we are the only listed Bitcoin and digital asset play on the ASX. Next slide, please. Our team has deep technical experience. Our CTO has been in this market since 2011, one of the more well-known cryptographers and cybersecurity experts. Fantastic to have him on board, as well as having some team members that have launched successful digital products into the market before and had some significant experience and success with monetizing those. We've recently added to our team on the funds management side. We brought on Matthew Harry. He's had 3 years of running his own digital asset firm, and yeah, to bring that in to complement the funds management experience should really help us grow that division as well. Next slide, please. We'll skip through 2 of those. So this is our blockchain consulting division that sees us providing blockchain smart contracting, design, and implementation for a range of different companies and industries, predominantly at the enterprise level. Some of our sort of highlighted work's been with the government, in terms of the ACT government, Ernst & Young, as well as a gold bullion business. So we're providing these blockchain consulting services essentially as our Trojan horse, so we can get in to understand big business operations, understand where there's consistent demand for products and where blockchain can solve a real problem in their business. So then we can move to that build phase. We can build it for DigitalX, own it, and sell it on multiple occasions. So if we go to the next slide, we can see some of the work we've done with a gold bullion business. We're co-owners now in X Bullion with a large financial services business as well as that gold bullion dealer. And that's essentially providing digital ownership to physical gold bullion, which has traditionally had an expensive and slow process to acquire it if you want to acquire physical gold bullion. And then if you're looking to acquire paper, so ETFs or funds, then you've also got the issues around, do you actually have that asset or is it unallocated in the case of the majority of funds out there? So we saw recently with COVID, the access to physical gold was really difficult. we're going direct to bullion dealers. So investors in X bullion actually can get physical gold bullion at the lowest cost in the market anywhere. It's really a product I see as being quite transformative. It's launched this week in terms of 4 different marketplaces from the ZipMex trade platform, which we've co-built with them. So that's a really interesting level where DigitalX has gone in, seen an opportunity with the client, build it, been paid revenues, and also now has a 15% stake. So looking forward to the success in that business. Next slide, please. On the research and development side, we have been running a working group to understand where the best opportunity that we have for building products is. Now, there's some major blockchain initiatives within Australia that we've been looking to leverage. We've gone through a 5-part cycle here, and we're really coming out the back end of this. So in terms of that, looking pretty confident that we can announce something in the near term there of the first product from that innovation department. And I think that's something that shareholders should be looking forward to. Thanks. And next slide. So we run into the DigitalX asset management division, where this is where we provide the easiest way to get low-cost exposure to Bitcoin and digital assets for qualified investors. So rather than going through all the challenges of acquiring digital assets on cryptocurrency exchanges, and in my experience and my time in the market, over 50% of those exchanges are no longer here, we can actually solve it. So self-managed super funds, funds can just go in and make investment decisions and not have to worry about the technical or admin challenges. We've recently listed on platform now, so investors can buy, via a couple of clicks through the NetWealth platform, Australia's #1 rated platform. There's another platform that's imminent. We've got a research collaboration going on with a New York-based digital asset research house, Delphi Digital. So that's providing institutional grade research, how Bitcoin, how digital assets can fit inside a portfolio from a macro perspective, why you should be looking at those, how the demand is being impacted in the market, what investors need to look for. And that's coming through twice a month now. I mentioned Matt Harry, who we've recently brought on board. And that's also meant that now investors that want to understand digital assets from a fund management perspective, they can actually get CPD accreditation through listening and coming along to our presentation. So sort of another element to how we're getting in front of various different fund managers for this new asset class. In terms of the performance, it has been strong, certainly been helped by that excessive stimulus we've seen both at a monetary and fiscal level. It's outperformed gold, as well as significantly outperformed the ASX share market. These numbers are at 30 June. Since then, the performance has actually accelerated, and I think this is going to be a real tailwind for us for attracting further investment going forward. We see 3 major demand drivers of Bitcoin and digital assets more generally. The first one is demographics. So millennials are the biggest buyer of digital assets. We know that their income now, well, they're the highest income generating demographic of any demographic. They just passed that in 2020. We're also seeing over the next 25 years around $68 trillion that's being passed down from baby boomers and Gen X into millennials' accounts. And they're also using different financial advisors. So we know they make allocations. We know their income's increasing. We know their wealth increasing. And we've actually seen through Charles Schwab brokerage that millennials are significantly attracted to Bitcoin. It's their 5th largest holding out of all their equities. There's a US OTC-based product called Grayscale that they've been flocking to in the US. So I think that demographic has a real sort of 10 to 20 year window of growth for Bitcoin and digital assets. Institutions are coming to the market. We saw one of the most famed macro investors, Paul Tudor Jones, just recently announced he's making a 2% allocation towards Bitcoin. And that's really meant that a lot of other investors have started to come out and say, well, if this investor's had 30 years of success, is starting to look at it, then maybe I should too. Taking that, I guess, career risk away from investors that want to look into this asset. Renaissance Technologies LLC, the world's best performing hedge fund, has recently jumped on the CME. So the CME offers institutions the ability to play the Bitcoin market through futures, and we're seeing month-on-month growth of the amount of users coming onto that platform. And over on the NASDAQ, we had MicroStrategy. They were sitting on around $1 billion of cash. They made a decision to invest around 50% of that into Bitcoin over the last few weeks. It took them 3 or 4 months to get the board across what the risks were, what the upside was. And they originally made a $250 million investment at around 12,000. Last week when it dipped, they made another $175 million investment. So the institutions are certainly coming. And the third demand driver is that QE financial instability. We know that money printing has been a demand driver for us. And that's certainly, I think, going to continue to grow. So in terms of the performance, we've seen, so this is on the monetary inflation. So why Bitcoin's attractive is that there'll only ever be 21 million. 2009, there was 0. Around 2134, all Bitcoins will be released into the marketplace. And today, there's 18.5 million. So that's what this chart attempts to show. So while that initial distribution of 18.5 has been quite quick, the supply shocks are coming in. And the most recent one was just in May, where the yearly distribution of Bitcoin halves. So that happens every 4 years. We had one in 2012, we had one in 2016, and the year post that supply shock was the best performing year or years in Bitcoin's history, responsible for the majority of Bitcoin's gains. We saw that again in May, where we had that halving of supply, and that'll hold true for the next 4 years. So it's a case where the inflation rate of Bitcoin now is on par with gold. And if you look at how the US dollar has been seeing that inflation in terms of the monetary base, it was around 7% for the better part of the last decade before jumping to 10, and this year's accelerated to 23. So that sort of exponential growth is really causing investors to look at other store of value assets, and we're seeing Bitcoin as being an acceptable store of value for a number of investors in the marketplace now. Next slide, please. So if we look at that exponential growth, you can see it there on the chart. It's quite extraordinary, that level of printing of dollars. We don't think that will stop. There's only a few ways that I guess the US can pay down this debt. The first one is to raise taxes and I guess not spend as much as what they bring in. We know there's around $100 trillion of unfunded pensions, as the average US person that's 50 years old only has around $50,000 in savings, and people are living longer. Promises have been made, and I think it's going to be too difficult to essentially operate at a surplus and pay down that debt. The second one is default. That's going to have horrible ramifications for the entire marketplace. So we don't see that as being as having a likelihood. And then the third one is just that hidden penalty in the form of dollar inflation. It's far more palatable. It's been used over the last decade, and I think it's a strategy to be continued to be used. And that's why sort of gold and Bitcoin is coming back into focus. If we look at that last slide there as Bitcoin as an investment, it has had significant appreciation over its first 10 or 12 years. However, it's still a tiny asset in terms of global store of value. So that does bring with it increasing volatility, but it also highlights that potential upside. And I think that's something investors should be looking at. And I think DigitalX is a reasonable way, either through our fund as a qualified investor or through DigitalX to get exposure to that marketplace. Coming up for us, we've got the growth of this funds management division. We've got the growth of X Bullion, which has just been launched, our consulting base, and then also the announcement of that first digital product from our R&D division. So a few things happening for the company, and an exciting time for us. Thanks.
Thanks, Lee. I've got time for probably just 2 questions. There's a question here. Your business appears to have various projects on the go. When will the company start to turn a profit and become cash flow positive?
In terms of cash flow positive, obviously we're going to increase our revenues pretty substantially. We have reduced our operating expenditures by around 50%. So that's the first start. In terms of those revenues, we're looking for the funds management division to grow. That'll give us revenues coming off from the Bitcoin base, as well as from management fees that accumulate there. And then on the product side, well, it's pretty clear, I think, that we're in a growth phase. We're looking to launch new products, which we've been working on for some time. So I think that's the focus, to bring new products to market and to grow funds management. And then we can look forward to, I guess, profitability in the future.
And with the Bitcoin currencies, I've always struggled to understand how you value a currency, and then how do you build an investment process around selecting currency and running an asset management business in that regard?
Yeah, I think in terms of these digital assets, they all have a very different element to them. So some of the ones that have recently launched, one overnight over this week, has been Uni Swap, which is an exchange. Holders will receive a percentage of the fees that accumulate on that exchange. The fees are completely transparent. It's on the blockchain and transferred directly through to the investors. So that's trading on a PE of around about 20 times. It's a revenue base, all revenues attributed through. So I think PE is more, I guess, of a appropriate metric than revenue, considering that it is direct revenues coming through. So that's one way. In terms of Bitcoin as the store of value asset, I think an appropriate way may be, what are store of value assets at the moment? I've highlighted a few there, one being gold. You can see Bitcoins at around about 2% of the value of gold at the moment. So 50 times upside if it were to be a gold substitute as a store of value in the future. I think there's a number of reasons why Bitcoin is a better store of value than gold. One of which is that you can transfer it to anyone that you like. It's divisible. It's much easier to store. And in terms of being able to take that with you via USB or via a custody arrangement, it's much easier than taking physical gold with you. So I think that's that way. You could look at various other digital assets like Ethereum, which is providing a computing network, a decentralized computing network to software developers. That's competing with the Apple Store, with the Google Play Store. So what sort of revenues is that providing to those holders? You can approximate that with the valuations of those marketplaces. So I guess different metrics for different digital assets depending on their characteristics. And I think that's probably a story for maybe another half an hour sit down or something like that, Tim, when you're interested.